You ever look at your grocery bill and wonder, why is everything so expensive all of a sudden? Well, the answer might actually be found in headlines about a conflict happening thousands of miles away. It seems crazy, right? But there is a direct line connecting global events to the money in your wallet. Today, we're going to break down that exact connection, how war, oil, and even the food on your table are all tangled together. Let's dive in. So, let me ask you this. What if a war happening on the other side of the world could literally double the cost of your commute overnight? I know, it sounds like something out of a movie, but the economic chain reaction that makes this possible is very, very real. It all boils down to this single number, 20%. That's it. 20% of the entire world's daily oil supply gets funneled through one tiny, vulnerable spot on the map. And believe me, that spot is almost always at risk. And that spot, the heart of our story today, is the Strait of Hormuz. We need to take a closer look at this place, because this narrow strip of water holds an unbelievable amount of power over the entire global economy. Think of it like this. If the Middle East is the heart of the world's oil supply, then the Strait of Hormuz is the main artery. It's pumping all that oil out to the rest of us. Now, what happens if you block that artery, even for just a little while? The whole system has a massive heart attack. So when a conflict kicks off in that region, the very first thing that happens isn't what you think. It's not like the oil tankers just stop sailing. No, the first thing that happens is much more human. It's fear. And in the world of financial markets, fear is an incredibly expensive thing. Instantly, everyone from oil traders to shipping companies to entire governments starts asking these frantic questions. Is our supply about to get cut off? Are our ships going to be attacked? Are insurance costs about to go through the roof? Just this cloud of uncertainty, these questions, that's all it takes to send prices into a spiral. And this brings us to a really important idea. It's called the geopolitical risk premium. Basically, it's a price hike driven by nothing more than psychology. Buyers start paying more for oil right now because they're terrified they won't be able to get it tomorrow. You can think of it as a fear tax that gets slapped onto every single barrel way before a single drop of oil is actually lost. But then, what happens when all that fear actually becomes reality? You know, when the conflict escalates, the tankers really do get halted, and that massive flow of oil slows from a river to just a trickle. Well, that's when we move past market panic and into a genuine supply shock. The economics of it are brutally simple. Step 1. The amount of oil available on the world market shrinks, and it shrinks fast. But, and this is the absolute key, the world's demand for energy doesn't just stop. We all still need to drive our cars, run our factories, and light our homes. So when you have the same number of people chasing way less oil, prices only have one direction to go, up, way up. And the jump can be just staggering. You could have a stable price of, say, $80 a barrel, and then, bam, it surges past $150 in just a few weeks. And trust me, this isn't some wild guess. We've seen this exact pattern happen time and time again during past crises. And here's why this hits you everywhere, not just at the petrol station. Crude oil is basically the lifeblood of our modern world. It's in the plastics we use, the chemicals we need, and even the fertilizers that grow our food. So when the price of oil spikes, the cost to make and move pretty much everything you buy goes right up along with it. Okay, so that's the big global picture. Let's bring this crisis right back home and talk about what it means for a country like India. How does a war in the Middle East put direct pressure on an Indian family's monthly budget? Well, for India, the reality is pretty stark. The country imports over 80% of all the crude oil it needs. This massive dependency means that when global prices go crazy, India has almost no shield. It has no choice but to buy oil at that higher price. So you can see the connection is direct. It's unavoidable. When global oil prices jump, India has to buy its oil at that new inflated cost. That extra cost gets passed all the way down the supply chain, and you see it almost immediately in the price you pay for petrol and diesel at your neighborhood fuel station. And this is really where it hits home. It's a total domino effect. First, it costs more to fill up your car or your bike. Then, the trucks that deliver all our goods have higher fuel bills, so the price of vegetables, milk, pretty much everything at the store starts to creep up. You might even see online delivery apps adding a fuel surcharge. The end result? Your entire household budget gets squeezed from every single direction. All right, let's zoom out one last time. What if this isn't just a short conflict that blows over quickly? What if it's a long, drawn-out war? Well, the consequences can be much, much bigger than just higher prices. We could be looking at the beginning of a full-blown global economic crisis. History shows us a pretty grim and predictable timeline. First, the oil shock hits. A couple months later, that shock morphs into worldwide inflation. Pretty soon after that, businesses start cutting back. They stop hiring, they stop investing, and within a year, the whole world can be staring down the barrel of a global recession. And hey, don't just take my word for it. This is one of the clearest lessons from economic history. If you look back, you'll see that almost every major recession in the last 50 years was kicked off by a huge spike in oil prices. The connection is powerful, and it is undeniable. So the whole chain reaction is actually pretty simple when you break it down. A conflict somewhere far away creates a risk to the oil supply. That risk drives prices through the roof. And in the end, that higher price is paid by every single one of us, at the pump, at the grocery store, and in our homes. And that leaves us with one final pretty unsettling thought. The Strait of Hormuz is just one of these critical choke points. In a world as deeply interconnected as ours, where we rely on these complex global supply chains for everything, it really forces you to ask, where's the next vulnerability? What's the next choke point that could throw all of our lives into chaos?